Hello, I'm Tim Beggins, president of Elk Trading Company. In the midweek natural gas report, the natural gas prices are higher. Currently, right now, for the spot January contract, we're trading at 3.9930, up 10.7 cents or 2.75%. And as you can see here, possibly the reason why the RSI is turning higher, and we're too far away from both the 13 and 48 period exponential moving averages. So we're getting a little bit of a mean reversion tug, if you would like, as people are taking some of those short profits off the table because next week is Christmas. That's right. And it wouldn't look like it outside because it's going to be 78 degrees in Houston on Christmas Day. It's insanely warm. But here's the deal. We have expiration on the 29th for the January contract, which means, hey, we're off Thursday for Christmas. We've got an early close on Wednesday. Then, of course, it's just Friday. So really, you've only got 2 days to trade next week, Monday and Tuesday. So everything's going to get choppy, very illiquid, and very volatile. All right, so let's turn to look at the option expiration, which is going to go on Friday, the day after Christmas. And as you can see here, the highest open interest still at the $4 puts with 35,030. It was down 24.62. And as you can see, every 25 cents all the way down through these strikes, 350, 375, 350, 3.25, and $3 all have a decent amount of open interest. So let's turn to the hourly chart. And as you can see right now, we did get above yesterday's high by one tick, which means, well, nothing. It looks like it's just sort of a dead cat bounce right now. And as you can see right here, we're above the daily pivot at 392.40, but we are still just kind of waffling around that first resistance level at 4.007, secondary resistance at 412.70, and above that 421. Our first support, is 3804 on the downside. So let's turn to the overseas markets, and this is the TTF contract here versus the Henry Hub. And as you can see, the other day we bottomed out at 4.077. Intraday went below $4. That $4 level is pretty critical. And currently, right now, we're trading at 5.35. So a nice, decent pop here. Why? Because there might be some weather in the end of the month for Europe. Maybe. And here's another thing to take a look at with all the volatility around both Russia with the Ukraine peace deal maybe happening, but also Venezuela, where the U.S. Armada is trying to box in Maduro and tell him, take a hike. Well, what's going on? We're bouncing up a little bit today here, currently up 92 cents to 55.977, but that is below the marginal price for barrels here, around $65. That's the blue line here. And if you go all the way back, well, I'm sorry, but the next level of support is $43.50 per barrel. So if things don't work out with Russia, if they don't work out with Venezuela, well, unfortunately, we're heading south. How about the temperatures? Well, the 8 to 14-day temperature outlook is blisteringly warm. As you can see across Texas, it's above normal, including Oklahoma. And then it just like a rock throwing into a pond, it just ripples out all the way up into the Midwest, only near normal temperatures on the coast and slightly below normal in New England. Let's take a look at the wind chill factor here for the GFS model on pivotalweather.com. And as you can see, we do get some chilly weather on the 1st of January at this moment. But as you can see, most of that cold air is trapped into Canada. Just a brief amount upper Midwest, Minnesota, Wisconsin, and parts of the Great Lakes states around Pennsylvania, New York, and Ohio. But let's turn to Europe. A little bit better for the end of the month. There looks like there might be some cooler weather coming in for both Spain, France, and parts of Eastern Europe. But what about China, Asia? Well, it looks pretty warm for the end of the month, and it also looks warm for the Koreas and Japan. There is intermittent cold, but nothing lasting, and that's part of the kind of the pattern for this winter so far. Let's turn to the Arctic, and as you can see, the ice cover continues to expand. We're almost closing that upper passageway for the Hudson Bay with ice. And once that happens, the rest of that body of water will freeze over, and that will give a clear path to skate right over that and head right into the US, including the Great Lakes and Mid-Atlantic states, where the highest natural gas heating demand is. So let's turn to the nuclear outages. And as you can see, we've only got really Palisades up in Michigan is still down, but now Diablo Canyon out in California is also down 50%, and Surrey is still down 50%. So we've got a little bump up today. We're up to 3.2 gigawatts that are out, but the rest of the fleet is doing very, very well. And here's our oil and gas E&P sector. These are stocks between $2 and $10 billion and have a high short float, over 10%. It's a sea of red for Santa's outfit, unfortunately. Maybe we'll get green on January 1st, but right now, everything's down. Our biggest loser, Northern Oil and Gas, down 10.44%. Our laggard right here, obviously Murphy, which did well last week, down 4.53%. So as you can tell right now, we are currently trading just about $4 right now. We just popped up a little bit further, 4.018, up 13.2 cents, or a little bit above 3.42%. So let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.